Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome back. Thanks for tuning in and joining us today on the Real Estate 360 program, your number one source for all of your real estate needs and education. Our program on this Wednesday and Thursdays at 2 p.m. is about real estate investing, and with a focus on that, which, of course, includes a pretty broad set of topics in real estate, because we need to know lots of things to make good investment decisions. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network, and we're broadcasting for the first time in the brand new studios of KDOW. I'm your host for the Wednesday 2 p.m. and 9 p.m. edition of the Real Estate 360 that comes to you daily Monday through Friday. Also at 3 p.m. with my co-host Joe Cachera and Laurie Graymont and Mike D'Ambrosio. If you can't make the live show, you can catch our podcast on RE360Radio.com, and my programs, Tom at TomWilsonProperties.com, are on iTunes or on YouTube. Have another great program for you today. We have Richard Crouch back with us, who's a regular guest on the program, because he does such a good job at looking at the marketplace and helping us figure out what's going on. Richard is an entrepreneur, Silicon Valley. He's been with several companies and co-founded a company here in Silicon Valley, and then he transferred over to the real estate business, which is in the marketplace, which is something that a lot of us techies like to do. And he's been now with Alain Pinel Realtors as a top producer since 2002, and he's also an investment advisor for Transamerica Financial Advisors, and does, as I said, a nice job in interpreting the marketplace. So we're going to talk about what's going on in the current marketplace today, both nation and California and Bay Area, and what do we see happening out there? What are the stats telling us? Should you be a buyer? Should you be a seller? Where are things headed? All things that are important to know, whether you're an investor or whether you're an owner-occupant. Remind you that you can go to TomWilsonProperties.com and sign up for a weekly newsletter on economics as they apply to real estate. No obligation, of course, and it will not be, your name will not be given to anyone else. You also can certainly ask for a report that we have on how to best evaluate the marketplace, metro, and products to invest in for the best returns and best future upside rents and appreciations. And you can also certainly email to us at any time and ask us any questions and ask us about guests and topics that you'd like to have discussed. So we'd like to bring on Richard and start talking about the marketplace. Welcome back, Richard.
Thanks, Tom. Good to be here.
Sure is fun in this dynamic marketplace. We have so much information that's coming to us. It's daunting for us who are in the business to figure it all out. For those that are just reading their local newspaper and headlines and getting that somewhat filtered and somewhat narrow perspective, it's certainly even more daunting. But we enjoy it so much. We like wading through, filtering it down. You do a nice job for us with that and help us figure out what's important. And we were talking before we came on about how you got to look at the data, but you also can use your eyes. I always tell people when they're considering an investment property, you need to run the numbers, you need to go have experts help you and so forth. But in the end, I always give the acid test. Would I be okay with my daughter living there? And similarly, right now, if you're trying to figure out what's going on in the marketplace, there are a lot of things to see when you drive around, aren't there? What are we seeing?
Well, I mean, this is it. Before we go jumping into lots of statistics and different scenarios to understand the market, recently, this has happened to me several times, but recently I'm driving down a street in the Silicon Valley area, And I'm sitting here thinking, gee whiz, here's this building that's looks like it's all being built. It's not done yet. You've got cranes moving around, and it looks like, holy, where are the people who are going to live in this building come from? I mean, it's if you observe as you do, walk around, drive around, keep your eyes on what you see, because if you see that kind of activity, what that means is there's somebody who has a lot more information that we have, or any of us have really, except if they're in the development business. They know that they're building because the market needs what they're building. Now, true, sometimes they miss, but most of the time they don't miss.
Yeah, I'd rather bank on what a lot of people are doing because of the large levels of market research that they do than I would to go contrarian to it.
Well, not only that, but if you do build, and maybe if you miss it a little bit, at least you've still got the asset, and you maintain your competitive position in the market. If you decide not to go because you're worried that there aren't going to be people that'll buy or rent or whatever the case may be, your competitor is going to come in and potentially eat your lunch. So it's the nature of entrepreneurship in that sense.
Yep. Now, indeed, you got to look back and say, well, there were still builders there in 2007, 2008 who were drinking so much of their own Kool-Aid that they didn't know when to quit.
Right.
But, there were quite a few years before that when the signs told you that, that things were going up.
Right. And by the way, this is not just here in Silicon Valley. For example, in Miami, the founder of the KCM blog, which is all about real estate, he bought a property there 6-7 years ago. And then, of course, the crash came. But before, when he bought it, there was all kinds of building activity going on in Miami. There were big buildings. There were apparently going to be mixed use, retail, condos, townhomes. And he was emboldened to go ahead and buy something because he saw it happening around him. And then the crash. Well, that's a pretty sinking feeling, right? He's now saying, however, the cranes are back. And guess what? I've already gotten a bump on the price, the value of the property that I purchased. So this isn't just Silicon Valley. It's places like Miami. And I think, Tom, you mentioned in your experience in Texas?
Well, I think, yes, you need to. There are lots of areas where that's still not happening, but there are others that are. And in recent weeks, I've been to Dallas twice, and I've been to Houston. And in both those areas, there are cranes everywhere. I mean, we're building huge infrastructure. And I must say that as my listeners have heard me tell you the facts, that Dallas-Fort Worth dropped the least of any metro in the United States, which is one of the many reasons I like that. But they even during the bottom of the crash, for an area like that has 24 Fortune 500 companies, and I think none of them moved out during that period. And they were doing a $1.5 billion expansion of the third busiest airport in the world. So they knew that they were planning to be around and take advantage of things when they came back. Now, smaller players have to hold out a little longer, but we're seeing a lot of construction going on there, just like we are here in Bay Area and Silicon Valley.
Well, and Texas, of course, the energy business is all about what Texas has going for it, and is definitely a reason to invest there. If you're going to invest anywhere other than here in the Bay Area, that's one place. Maybe North Dakota, but I don't think North Dakota doesn't have the critical mass.
Doesn't have the breadth. It's probably a decent gamble if you want to put some of your assets into a gamble.
Yeah.
But there's less. There are places with a lot less gamble to go in.
So let me give you another real quick understanding of this topic, and that is that a lot of people think that, as I said, that the demand and the growth and the wealth is right here in Silicon Valley, and as they're conditioned to know that if you go to the Central Valley or the Sierra Foothills or the Sacramento Valley, for example, that things are still mired in the mud, that people are underwater, the jobs are not there, da-da-da-da-da. Some of that's true. However, I can tell you for sure that if you wanted to buy a property in Placerville or Auburn or even in some of the Central Valley towns, there are people moving in there with cash and buying properties. And so don't expect, first of all, to buy something which is a great bargain. At the same time, be comforted by the fact that the success of the Valley is spreading. And that's a good thing for everybody.
And I think it's most people are aware, but for those that aren't, it's very typical in all metropolitan areas when a core metro booms, there's a phase delay from then until the outer lying areas start to go up as well. And when things start to crash, the outer lying areas usually crash first, and then it comes back toward the core. So the core areas are usually the safest place because that's where most of the jobs are.
Right.
And if you want to try to take advantage of buying someplace that maybe still has more appreciation left in the current upcycle, then some of these outlying areas may be areas to consider, but don't expect them to be still at crash prices. Right?
Well, no, but people, I know for a fact right now, people are commuting from Manteca, for example, some from Modesto, some certainly Tracy, Mountain Home, the places that got really hurt in this downturn. People are now buying properties there, and they are commuting into Silicon Valley. And I think what they have to
again,
and what they have to do is just be more aware of what the potential problems could be from a downturn.
Mm-hmm. Okay, we're going to, after the break, we're going to start to talk a little bit about demographics and how they're changing, and we're going to take a look at the different kinds of buyers, different kinds of sellers, how they are different now than they were before, and how a knowledge of that will help you in making decisions about what you want to buy and sell, and who should. And that's certainly changing. We have with us in the studio today, brand new studios here for KDOW in the San Francisco Bay Area. We have Richard Crouch, who's a frequent guest with us, and he is helping to interpret the marketplace for us. This is Tom Wilson with KDOW 1220 AM, your Wall Street Business Network, and stick with us. We'll be right back.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. We have in studio with us our frequent guest, Richard Crouch, who's a top producer for Alain Pinel Realtors and also investment advisor for Transamerica Financial Advisors, and a past entrepreneur and engineer by education, Silicon Valley. So that means he's a great analytical guy that helps us digest what's going on in the marketplace. So we were talking at the last segment about use your eyes when you go around to different cities and different areas and see where the activity is going on, because the large developers have large marketing budgets, and they get the best advice they can get. Sometimes they miss it. Sometimes they don't stop to drink the Kool-Aid and go too long. But right now, the signs are looking quite good in a number of metros, not all, and a number of areas that this growth is going to continue for a while. Let's talk next about the millennials and boomers. Tell the audience who a millennial is.
Well, millennial is someone who comes of adult age by the year 2000, essentially. So my oldest daughter, for example, born in 1982, was 18 in the year 2000.
As was mine.
Yep. And then her younger sister, 4 years younger than that. So a millennial, that's the type of people. They followed the X and Y generations, okay? And, it's this particular generation that there's so much concern about because they've grown up with a really good standard of living that their parents have provided for them. And a lot of the people are pursuing careers of what things they like to do, not necessarily the really more difficult things. And so we all worry about what is this generation going to produce. In fact, I've even seen it quoted that they will be the first generation, since they've been tracking this sort of thing, that'll make less money than their parents. It's always been the other way around up until this particular generation. However, there's some information here that the Pulte Group pulled together in a survey about the millennial generation. And they've said that what they found is that they're more optimistic regarding the American economy than other generations. According to the survey, 54% of the millennials believe the economy is in better shape today than it was last year, compared to only 41% of the total population. So it seems this optimism is impacting purchasing decisions. 74% of the millennials view now as an excellent or good time to buy the things they want or need. That doesn't necessarily mean real estate. Jim Zoomer, Vice President of Corporate Communications from the Pulte Group, he explained, no other cohort of adults is nearly as confident about their economic future as the millennials are right now. This is definitely a change, as millennials have regularly been viewed as the disenfranchised generation vastly affected by the fallout of the recession. But now, with an increased sense of optimism, this generation is starting to feel as though they have the resources to lead the lives they want or expect in the future. So a couple of statistics to go along with that. 85% of millennials plan to purchase a home in the future. That's certainly an endorsement of the American dream.
It is, and that's I think that's interesting because somewhat contrarian to some people's view that everybody's happy to rent. Now, some people have to only rent, but at least if the desire is there, then there's potential buying power, right? And if you get, what's that number again?
85%. If all 85% wanted to do that this year, it would be impossible.
Yes.
So you have to realize that this is pay out over a number of years.
Sure.
Okay.
Sure.
And what it means is going to be robust demand for housing. And we'll have more details on the rent versus buy and all that here in a little bit. Also, 49%, this clarifies a little bit the timing, 49% or half plan to purchase a home in the next 2 years. Of those planning to purchase, 56% are current homeowners and 41% are renters. 65% prefer spending more money on a home that is move-in ready compared to doing renovations. And finally, 58% increased their interest in purchasing a home in the past year as the positive attributes of home ownership resonate with this generation.
Wow, good stuff. Good stuff. Fascinating. I think that's quite different views from what a lot of people would have, and it's good to know that it affects should affect your buying decisions.
It's very comforting.
Yep.
Yep.
Got Richard Crouch with us today in the studio from Alain Pinel Realtors and Transamerica Financial Advisors, and he's helping us interpret the market. We'll be right back with more great data and information about where the marketplace is going. Stick with us. We'll be right back.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for being with us. Our frequent guest, Richard Crouch, is with us today. Silicon Valley entrepreneur, Alain Pinel Realtors, top producer, Transamerica Financial Advisors, investment advisor. helping us to interpret the marketplace and what's going on. In the last segment, we were talking about the millennials and how that's a buyer sector that's coming along, which is here now, which is once 84% of them want to own a house at some point, and that's going to be a major factor, and that's a higher percentage than people most people think it's going to be. Now we hear more about boomers, kind of on the other end of the spectrum. What facts do we have about them, Richard?
Well, I think that the houses that the millennials want to buy, in a large part, are homes that baby boomers currently own. And so baby boomers, essentially, as prices have risen, so has the equity in many homes across America. And therefore, the homeowners have been who were shackled to their house because of lower negative equity for the last several years, are again free to make a move without worrying about bringing cash to a closing table in order to sell. There's a strong belief that this newfound freedom will release a pent-up demand of sellers who want to move up to the home they've always dreamed of, or want to downsize their primary residence and purchase a second home potentially, or to liquidate their real estate holdings in favor of some other investment options. So basically the boomers, which is a $76 trillion market in terms of money moving over the next 5 to 10 years, from the boomers to their from the parents to the boomers, from the boomers to their children, is the single biggest overall, from a dollar point of view, group of buyers and sellers that we have. So they're going to play a major role. Now, a lot of these buyers, or boomers, are now that they're at retirement age, they're trying to figure out retirement. Unfortunately, a lot of them are stuck with their real estate assets, sometimes where they live, and sometimes the income properties that they hold, and they really don't have a good understanding of how to get out from under that, to be free of all that. They want to downsize, they want to right-size, or live where their children now live, or watch their grandchildren grow up. So how are they going to accomplish that? Well, we're trying to help them with that. But basically what it involves is selling, either getting a 1031 exchange or moving assets into their real estate assets into other asset categories, which can supply lifetime income, for example. So it's a complex area, but a lot of good solutions, and the boomers are very heavily looking at all that. It's going to create more homes to buy for the market, for investors. All kinds of good things, I think, will come from that, not to mention their happiness in retirement.
And some of the options for them to move that money into for retirement could be rental properties in cities where they cash flow well.
Absolutely.
Could be into some kind of annuity.
Absolutely.
They want to be done with that.
Yep.
There's structured sales, which is an option that's now becoming a little bit more practical to implement.
So defer capital gains tax. That's right.
So there's lots of options, and of course within California, to protect your tax situation, your tax level that you have, moving to another home in California with the rules that they have about the taxes is another option as well. We have Richard Crouch with us today, back again as a frequent guest, talking to us about the marketplace. This is Tom Wilson with Real Estate 360, KDOW 1220 AM, the Wall Street Business Network, and we'll be back with you in just a moment.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Thanks for staying with us. Got Richard Crouch in the studio today. Entrepreneur from Silicon Valley turned real estate industry with Alain Pinel Realtors. and also investment advisor with Transamerica Financial Advisors. And we're analyzing the marketplace, or I should say Richard is for us, and we are talked about the demographics, how that's changing, and what Richard, are some reasons to buy and sell now?
Let's talk about sell first, because we sort of talked about the boomers and the millenniums, and in order to buy, somebody's got to sell before you can buy. So, but there's 5 reasons basically. The first of which is the most serious buyers are out there right now. Now, again, the most serious buyers that are out there are millenniums, and in some cases boomers who are downsizing.
I know several. So my daughter's 32, and several of her friends recently bought. Yep.
Absolutely. There's less competition right now. There's no secret about the inventory. And by the way, the inventory in Silicon Valley, for example, right now is no more than it was 1 year ago, which really is an interesting fact.
Yep. For years, many people have thought the floodgates are going to open, and they never have.
Has not happened.
Or not.
Yeah, we definitely aren't going to see floodgates. The process will be quicker, obviously. All sales right now are, if you're a seller, you're going to sell, if your house is appropriately priced, you're going to sell in 7 or 8 days. And you can close very often anywhere from 2 weeks to a month. So that's a big plus. The other thing to not forget is that there'll never be a better time to move up, because the longer you wait to move up and the corresponding increase over that time you wait, property values go up, it's going to cost you more and more to move up. So better to do it now than not. Even if you have to sell your own place and you get less, that's a lower price point than the one you're moving to. So any way you look at it, if you want to move up, now's the time to do it. And then finally, the most important, absolutely the most important time to sell, when it's right for you and your family and your lifetime plan. Don't lose sight of those things. Don't get overwhelmed by the statistics and the prices.
Great point.
Yeah. So that's for sellers. One other thing for sellers before moving on to buyers is make sure that you price your property correctly. There's a tendency to think that, in fact, I had a recent client who called me up and said, I want to sell my house, but I won't sell for less than $2 million. And I went and saw the house and looked at the comps. It was worth about $1.7 million. And she just couldn't get it out of her head that it wasn't worth $2 million, so she's not selling. And yet she's actually an older senior citizen, should be selling and putting the money to work from an income point of view or for her children. So when it comes to pricing it right, let the market tell you what the price is. The realtor that you use should be able to identify a price at which buyers will come in and bid up the price, and how much they bid it up, that will determine the final sale price. Okay. Now, for our buyers, one of the biggest hot topics of discussion is the increasing cost of renting. And let's just try to throw a few points out about that. For one, there's several of the pundits in the industry have come to the conclusion that buying a home is less expensive than renting by 38%. I'm told there was a recent article in the Wall Street Journal that came out with an opposite conclusion, and there has been rebuttal to that showing that there were some definite mistakes made in the analysis.
Well, I think one important thing is, again, the market is thousands of submarkets, and
that's right.
The answer isn't the same for every location.
Yeah. So just for the cost of renting from 1988 to 2012, for example, and we know it's gone up dramatically since 2012, from just under, let's say, $340 a month. This is the average apartment, the average place in the U.S., to $725 a month.
Over what period of time?
1988 to 2012.
Okay.
All right. So that's one factor to keep in mind. And also another factor to keep in mind that every single day, today, as we speak, tomorrow, yesterday, there's over 12,500 homes selling in the U.S. every single day. So don't get the idea that nobody's selling, because that's not the case. Now, what about impact on net worth? There have been some analysis done and one by the Federal Reserve, which I think should be a fairly credible organization, that the net worth for buyers, or for homeowners, I should say, is 30 times that of renters. Okay? Average American family net worth of $77,000. 61% of that is in home equity. Homeowner's net worth 30 times greater. Average homeowner has a net worth of $174,000. Bottom line, that you are more likely to succeed financially if you own your own home. So obviously, you have to have the money to buy your own home. You have to have the right job. We understand that.
And you have to have the right loan.
And you have to have the right loan, and you need some people to help you, some professionals to help you, especially in this market that we are in today. So call your realtor and tell them, get qualified by a lender, and then you can be prepared. Okay.
Okay. All
right. So the other thing about debating what the best long-term investment is, right? Well, from the study that was taken again by the Federal Reserve, 30% of the respondees said real estate was the best long-term investment. 24%, 6% less, said gold. 24% more said stocks and mutual funds. 14% said savings accounts and CDs. And finally, 6% said bonds. So the winner,
interesting. Step
forward, please, real estate, the best long-term investment on the planet.
Yep. Well, all of our listeners know that I believe that. That's what's done best for me. We'll be back with a wrap-up here with Richard Crouch from Alain Pinel Realtors and Transamerica Financial Advisors. Be right back and give you some good wrap-up and takeaway items. Tom Wilson, Real Estate 360, KDOW 1220 AM. Stay with us. Be right back.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. Have Richard Crouch in our office, into our studio today, who's a frequent guest for us. I want to remind you, if you go to TomWilsonProperties.com, you can ask for a report on how to select the best metro and the best product. You can also sign up for a newsletter on the economics of real estate, what's going on in the last couple of weeks, a short read to help summarize things for you. And if you'd like a consultation by Wilson Investment Properties and yours truly on how to proceed and improve your real estate portfolio for investment, we'd be glad to do that for you. Richard, how can folks get hold of you, by the way?
The best thing is to call me, 408-391-1231.
Okay, and again, Richard is he's with top producer with Alain Pinel Realtors, and he's also an investment advisor representative for Transamerica Financial Advisors, and he is a very objective and analytical person that'll give you a good, very good advice. Richard, what else can you tell us and recap here for the and some final thoughts for our listeners?
Okay, well, I think that what is the condition of the housing market today? That's an important question because it points to what we could expect in the future, as opposed to looking at the situation right now where it's hard to find homes, there's no inventory, sellers aren't selling. One might conclude from that the housing industry is headed for trouble, maybe more from a social point of view than an actual analytical point of view. But let's just see what Freddie Mac has to say about the housing today and why it is stronger. Obviously, home sales up 13% since the low point. Housing starts up 50% since they bottomed out. House prices up 16% since the trough. And what are the projections going forward? They expect them to continue to improve. Home sales to increase 3% as the purchase market continues to evolve. That's in 2014, so that's 3% in 2014. Almost 20% of growth for housing starts in 2014, which will help ease tight inventories in many markets. Home value increases will continue their positive momentum, and the cumulative appreciation going out a little bit further is 19.7% by 2018. Even the most bearish predictions are 11% appreciation by 2018, okay? So it's not hard to understand why you can believe all this. If you're driving down the road and you see cranes out there, they're building buildings with homes and apartments and townhomes. That's because they believe these projections. And it's happening other places.
They have bigger marketing groups than you and I do.
That's exactly right. And it's true elsewhere in the country, like Miami, for example.
A lot of this information that Richard shared with us today is going to be on TomWilsonProperties.com and also be on Richard Crouch's website. If you want more information from Richard, they can connect up with you on...
That's Richard and A-N-D, Candace, K-A-N-D-I-S.com. Richard and Candace.com.
Great always to have you with us, Richard. This is if you want more, say, weekly newsletter on what's going on in economics as it affects real estate, go to TomWilsonProperties.com and sign up for our weekly newsletter. You can also ask for a report on how to select the best metro and the best product for investing in. And you can also get a lot of investor information on that website, TomWilsonProperties.com. So it's great having Richard with us, and we look forward to having you back for our next segment. Remember, the only thing that matters is what you do next. This is Tom Wilson, Real Estate 360. Nice to have you with us, and we'll see you on the next program. Thanks, Richard, for being with us.
Thank you.
You've been listening to Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. AM 1220 KDOW.